Welcome back to the Cryptocurrently podcast. I would like to tell you what we're talking about today, but you know damn well what we're talking about today. We have a decision to make. There are three ways to go about this, and it's very important in decision making to boil it down to its simplest form, so that you can more confidently make your decision. In my estimation, you've got one of three things that you can do at this point. All right. Now, what's the layout? What's the landscape look like? Well, there was $800 billion in the market, and now there are five. All right, so $300 billion has left the market, and so I would imagine that most of you are down 30%, either off of your initial or off of your highs. But no matter who you are, you're down right now if you had money in the market. So, what do we do from here? One of three things. You can either sell out all of your positions and exit the market. That's one way you can go about it. Now listen, decision making. You are a grown-up. You're a grown human being and you can do whatever you want to do. There's freedom in that, right? No matter what you decide, as long as it's right for you, right? If it lends to your happiness and your mental health, then whatever you decide is right. Okay? You can sell out of the market and just say, you know what? It's too volatile. There's too much. I don't know enough about it. I'm just going to exit the market. If that's what you decide, okay, that's fine. It's good. It's good that if that's what you decide. Another decision that you can make is to say, I'm just going to leave my positions right where they are, and I'm just going to wait until this $300 billion comes back into the market, at which point I should see a full recovery back to 100% of where I was 5 days ago. Right? You can do that too. And as a matter of fact, there's probably a lot of financial advisors and whatever. Those kind of people that would tell you, that is a strategy. That's a strategy that people use. It's not outside of the realm of what is possible. And the thing that both of those decisions have in common is that they are both decisions to do nothing. Again, I'm not disparaging that. I'm not talking about if you decide to do nothing, as long as that's what you've decided to do, then do that. But it has to be a decision. Decisions do not come easily to people. Decision making is a learned behavior, and it takes practice. All right? So what I'm encouraging you to do is make a decision either way. And like Tony Robbins says, a decision comes from the Latin or the Greek root word, which means to cut. It means to cut away anything else, and then this is what you're left with. So decision number one, sell out, walk away, and go join the Church of Scientology. I don't know. Decision number two, do nothing, but just leave the money in there and hope to God it comes back. Hold on for dear life, right? Both of those decisions are fine, but decision number three, if you're going to do it. A lot of people like to use fancy words and call it dollar cost averaging, okay? Look, it's doubling down, right? $300 billion has left the market. It didn't go from Bitcoin to, Dogecoin, Dogecoin, however they pronounce it. It didn't go to CryptoKitties. It left. It is not in the market anymore. So decision number three, if you so choose to do it. Now, disclaimer, if you put any money into the markets, you can lose it at any time, and all this whole cryptocurrency market could completely, conceivably, it could completely disappear tomorrow. Right? There's no guarantee that you're going to get your money back. So keep that in mind. That being said, by the way, my licenses to give people advice on trading any sort of security expired years and years and years ago. I am not a licensed broker. I'm not, these are just my opinions, and I'm just here to do a show, and you can take what you see or what you hear, and you can do whatever you want with it. All right? I am not responsible for anything that happens in your portfolio. But I want to talk about decision number 3 really quick, because this is a doozy. It's a big one. What do you believe about this market? Okay, now when I was before I was a trader, before I was a commodity trader, before I knew anything about the markets, I'm going to say something really profound here. Before I knew anything about the markets, I didn't know anything about the markets. Right? We're all at a different level of expertise. Some people know nothing at all. Some of us actually did this for a living. Whatever. We are where we are. A lot of times people look at financial markets like the stock market or the commodities markets, the futures markets, and now cryptocurrency markets. They look at these kind of markets and it's daunting. It's like it's Mount Olympus, and if I could just get to the top, that's where the gods live. These mythical creatures called stockbrokers and investment bankers. Ooh, these are the gods that live on top of Mount Olympus. All right. Well, let me just say that that's a very natural perspective to have if you're kind of new. All right. There's nothing wrong with that. I used to think the same way. When I was a teenager, I didn't know anything about the stock market. The stock market was just something that rich people did. Right. People who played golf and wore suits. That's whatever. But when I was a trader, I gained a whole new perspective. I've been to the top of Olympus, and I can assure you, there are no gods living there. Right? I've been to the top of the market, and I can assure you that the people who are at the top and running things and they're not smarter than you are. They're not better than you are. They may have figured out one specialized little thing, but they're not mythical creatures. They're people, and people are flawed. All of us, you, me, the gods on top of Mount Olympus, and the people at the top of the global markets. They're just folk, all right. And if you're looking at this market with a bit of a little bit of nervousness, like that's natural too. But we can explore this third option by just taking into account human behavior. And I want to talk about this because right now, this very moment, it needs to be captured and encapsulated. It needs to be put into a tiny little container so that we can observe it in the moment and make decisions based upon that. All right. There is no greater motivator in the human experience than fear of loss. Right? It could be fear of loss of your life, fear of loss of your money, fear of loss of love or possession. Fear of loss is a huge motivator. And right now, there are a lot of fearful people. And these situations don't come along very often. And they certainly don't all come together all at once, right? You didn't lose money on Bitcoin, you lost money on everything. Because the money didn't leave Bitcoin and go to Verge. The money exited the market. And so all those people that have that money right now are mostly inexperienced people, right? You don't need any sort of knowledge about markets to get in on cryptocurrencies. That's why there's so much money in it, is because you've got people who know nothing about investments or anything like that, and they're putting their money in cryptocurrencies. They're inexperienced, and they're not wealthy people. Okay, this isn't a market full of just billionaires and zillionaires, right? This market is full of money from people who don't know what they're doing. And when fear sets in, that fear of loss, the first thing that happens is cringing, right? There's a lot of people sitting, and if you don't believe me, just go on to any YouTube channel or Facebook page or blog and read the comments. If you want to take the temperature of the people right now, you have access to it. If you're listening to the show right now, then you have access to the internet and you can see for yourself what the people are saying. And that's access to the truth. Like what people are actually thinking, what they're feeling, right? What they're feeling is panic. They're scared, they feel like they've lost money, and that is powerful. Because what that translates into is once that fear has kind of settled, right? And it will settle, because here momentarily, not today, probably not this weekend, but soon. In a few days, people are going to realize that they're not bleeding, right? They're not physically hurt. Nothing has actually changed. They were down. They lost a little money. It's not that big of a deal. And once that mentality, that sort of way of thinking has settled into the masses, then people are going to come back to this market, and they're not going to see a bloodbath. They're going to see buying opportunities. They're going to think like, oh man, I can buy Bitcoin right now for 9,000 or 10,000, whatever ends up being the low. Last I checked, it was like 10,000. But they're going to be like, this thing was as high as 19,000. I could almost double my money if it just goes back to 19,000. That's how people will think. The masses will begin thinking that way. And so that $300 billion most likely is going to come right back into the market. And when I say right back in, I mean like end of February, 45 days, maybe 60 days, but eventually. Because that money is sidelined right now. They didn't take that money out of Bitcoin and go buy Amazon. You know what I mean? They didn't take the money out of Ethereum and they didn't go buy a plot of land. That money is sidelined right now. It's sidelined in their wallets. It's, and unfortunately, some people leave it, on the market. But that money is sidelined right now. And when that fear of loss kicks in, and that sort of, I don't know, I hate to say it, but it's kind of like greed. Like people are going to start thinking like, oh, I want my money back. And there's a lot of buying opportunities in there right now. Now, if that happens, you have to, okay, decision number 3, you have to ask yourself, do you think that will happen? Do you think that fear of loss is a primary motivator in the human experience? Do you think it is a universal experience, meaning you experience it, I experience it, Bill Gates, Warren Buffett, Donald J. Trump, whoever, everybody? Do you believe that is intrinsic to the human experience? Okay, well, if that's what you think, and if this is the decision that you know that you're going to make, do not delay the inevitable. Once you make a decision, then that's it. That's what you're going to do. Right? Like me with this podcast. Right? Why do I do this podcast? Because I decided to. I said, this is what I'm doing. I'm doing this podcast, and I'm going to talk about the things that I know about. And I know about markets, and I know about people. I know about human behavior. I'm a truth seeker. I'm a world traveler, and this is what fascinates me. People fascinate me. Most particularly individuals, because individuals are unpredictable for the most part, and fascinating. People, on the other hand, you get groups of people together and they become boringly predictable. And when we have an opportunity like this, we can say what's an individual going to do, because has a lot of variables. But we can predict with remarkable accuracy what people will do. As I've said before, like I can't predict what's going to happen, but I can predict how the people will respond to whatever it is that does happen, because it's always the same. It's always panic. The answer to that question, what will people do once the news comes out? It's always the same. It's always panic. That's always the answer. And what was it that caused this downturn? Was it China? Was it the news coming out from CCN? Cryptocurrency news, which by the way I highly recommend. Was it the news from CCN? From China? Was it? Because there was no news from China. The news was, here's no news. The news from CCN today, like when I opened it up and I read everything that they wrote about China, you know what the news was? It was nothing. There was a complete article saying, yeah, pretty much everything's the same as it was in September. You can't trade cryptocurrencies in China. You cannot trade cryptocurrencies in China. The news came out today. You cannot trade cryptocurrencies in China. You know what, I'm sorry to point this out, but that was the news in September. Well, I don't know why you're putting this. Now listen, I like CCN and I go to them every single day. But that's not news. Nothing happened in China. If anything, any of that news, because they're just repeating, well, the government said that they're not going to allow cryptocurrency. What they're actually saying is that China is trying to figure out a way how to let their people participate in the cryptocurrency market. They're just not there yet. So if anything, it's good news. Good news, everyone. It's good news. China is trying to make it so that their people can participate in the markets without screwing everybody on the electricity bills. That's good news, but the news itself is nothing. Nothing in China has changed. So what was it? Ask yourself, why did this happen? Was it the news on China? No. Was it the news from South Korea? Remember a couple days ago, the finance whatever guy comes out and he says, oh, we're trying to pass legislation to ban, Bitcoin or mining operator or whatever it was that they said. And then 10 minutes later, guy comes out and he says, no, it's not exactly accurate what I just said. What I meant to say was we're just trying to make it so that people don't get screwed. Okay, not news. It was a whole news story about nothing. There's no news on it. So let me just kind of break this down. But I wanted to illustrate the point that even news about nothing, as long as it's news, it pushes markets. Right? The news was nothing, and yet the market moved. Now, I want to read this email from one of the listeners, Andy, and it bears on this conversation. Andy from New York. New York, New York. That's right. I wanted to be a lounge singer, but they wouldn't let me, so I had to become a commodity trader. It was awful. I'm going to read this from listener Andy. He says, hi, Ralph. Listen, by the way, my name is Ralph, right? That's my legal name. That's what's on all my government forms. But people have been calling me Petey since I was like 4. So you can call me Pete, you can call me Ralph. It doesn't really matter. Says, hey, Ralph, I've been trying to contact you. I listen to your podcast on Spotify and really enjoy it. I have a few friends that I buy some cryptos with, along with my own stuff. And after you first put forward the idea that markets could see a dip, and one of those reasons might be the holiday credit card bills coming due, I surfaced that to my finance friends, whom I buy with. I was then obliterated that the idea was absurd and dumb. Ha, he puts. I actually really like the thesis, and whether or not you can attribute today's downsizing to that even a little might be hard. Wait a minute, did I read that right? I actually really like the thesis, and whether or not you can attribute today's downsizing to that even a little might be hard. I do think it has something to do with it. Anyway, I was wondering if you had any evidence that I can use to support the holiday Visa MasterCard theory in traditional markets. Yes, I can, Andy. Yes, I can, and thank you for asking. ... I would love to come back to these guys and prove them wrong. By the way, I'm not a finance guy, and likely butchered the theory when I went to try and re-explain it to them. Anyways, keep the insights coming, and hold on for dear life on all the cryptos. All right, Andy, thank you. Yes, and thank you, and yes. Just really quick, if you're listening on Spotify or iTunes, SoundCloud, wherever you listen to it, if it's anything other than Libsyn, I put this podcast into Libsyn, and it goes out to all the other places. And because I'm so new at this, I haven't figured out that if I want to read people's messages from anywhere other than Libsyn, I have to actually log in to that thing. And because of listener Andy in New York City, I've now realized that that problem shall be remedied post haste. So, why did the market dip? And Andy wrote in and he said, look, I put that, I told you guys like 2 weeks ago, the Christmas bills are coming. January 15th, and then January 17th is the expiration of the first round of the futures market. So I will qualify, because if people listen, if you're a listener and you think that sounds silly, that's fair, right? Because of Mount Olympus, what we were talking about, the tendency is to think these markets are run by calculations that Leonardo Fibonacci put forth, or Blaise Pascal, and it's all very formulaic, and you have to be really good at math and whatever. And if you want to set it, no, like that's not it. These markets are run by people. These are people making decisions. People, and they're just like you. They're not smarter than you. They're not better than you. They're just different than you somehow. So, what I will answer this to your friends, and please, Andy and the rest of you, if you've put that theory out into the ether there, and somebody ridiculed for it, share this to their social media platforms, and please do that anyways. Try to get the word out. The Christmas bills thing. All right. So how did the market take such a huge dip if it wasn't the news from China? The news from China was nothing's changed. Everything's the same as it was in September. And it wasn't the South Korea news, because they're not trying to ban it. They're just trying to protect their citizens, and we're all going through a huge adjustment period. There was no news. There was no news on some scandalous thing happened to Bitcoin and therefore it trickled down into the rest of the altcoins. There was no news. So what was it? What was it? Okay, well, what typically happens this time of year, right? The credit card bills theory or thesis is this. I actually took that from an old seasonal commodities trade. To make a little bit more sense, there is a commodity market where things are traded that we use every day. Anything that we use every day is most likely on the commodity market. Wheat, soybeans, bacon, otherwise known as pork bellies, gold, silver, oil, and all of its products, unleaded gasoline, heating oil, airplane fuel, everything. Everything that we use every day. And another category, all right, so there's grains, there's metals, there's energies, so natural gas is in there too. There's all these different categories of commodities. Well, there's another category called currencies. Now, typically, if you want to trade currencies, you go to a boutique brokerage house where they don't do anything else. They only trade currencies, and that's where I got my start. I traded currencies exclusively because it demands a lot more attention. It's a very demanding, if you're trading soybeans, well, there's not a lot of very sexy news that comes out on soybeans every single day. But currencies, President Trump will say something, Angela Merkel will say something, Theresa May will say something, and Vladimir Putin will say something, and the whole markets they start swaying like a tempestuous ocean. That's how currencies work, right? They're moved by political factors, supply and demand factors. How much money versus how many people, that sort of thing. And in the currency trade, there are certain things that are seasonal trades. Like if you're if you're trading wheat, all right, well, there's 2 harvests of wheat every year. There's a book that you can go buy. It was written like 100 years ago, but it was a wheat trader, and he wrote this book to his son. Now, he didn't write a book for everybody, but it's just so happens to be published now. And he wrote this book to his son. It was like a letter, and he told him how to trade wheat and never lose. And that's how people traded wheat for a long time. It was a seasonal trade because there's only 2 harvests, and then there's the American harvest and the Russian harvest, and there are seasonal trades to make. Well, the same is true in a U.S. dollar / gold trade. There's a seasonal trade. Here, let me give you one more example of a seasonal trade. Cocoa is traded as a commodity. Cocoa is obviously what they use to make chocolate. Now, if you were a betting man and you were just making seasonal trades, which month do you think, out of the 12 that you have available to choose from, which one of those months do you think the demand for chocolate goes up significantly? Well, I'm hoping that you guessed February because of Valentine's Day, right? I wanted to use that example because, cocoa is a commodity, chocolate is something people used, and people buy it more in February. Why? Well, because of a metaphysical concept called love, right? Again, markets are moved by people, and people are motivated by different things, and people are motivated by love, right? They love their girlfriend or wife, they want to marry them, make babies with them, and so they buy them chocolate on February 14th. That's a real thing. You can go back into the charts, go into the current, the commodity market charts, watch cocoa, and look at what happens to cocoa every February. Almost every February. It's not a guaranteed thing because, by the time you get to the market, it's already been factored in or whatever. But I'm just saying, like, there's a spike in demand for cocoa every February because of Valentine's Day, because people are people. So back to why did I say that the cryptocurrency markets was going to see a dip this week based on credit card bills? Well, because as a commodity trader, one of the seasonal trades that we would put on was on gold in February, on the February contract. All right. Whenever you're in the futures market or options, then if you're going to place money on a particular commodity on a particular month, then that contract that you open will expire in the month previous to it. So if you want to buy February cocoa or February gold, your contract is going to expire in January. So we would put on positions for February gold every year. Every year we would do it. And the reason why is because right in the middle of January, year in and year out, not always, but pretty consistently, the cost of gold goes up because the stock market goes down. And why does the stock market go down? Well, because people pulled their money out of it and they put it into gold. Why did they pull their money out of the stock market and put it into a safe haven like gold? Because the less informed people, the less acclimated people, when they get their bills in the middle of January, they go to their 401k and they dig money out of that, or they sell off some of their stocks that their granddad gave them or whatever. They go to the stock market to get money because they just received the damage report from the month before. It happens on a very regular basis. It's a seasonal trade that every commodity trader is aware of. So to Andy, your question, you asked me, says, I was wondering if you had any evidence that I could use to support the holiday Visa MasterCard theory in traditional markets. So yeah. I would love to come back to see these guys and prove them wrong. So yes, this is, if you, okay, you're in New York City, so you've got, you've got no shortage of men and women wearing pinstripe suits. Pull one of them aside and ask them about seasonal gold trades, and they'll tell you. This isn't, I know that, I might come off as some sort of prophet or some sort of mystic being able to call the downturn in the cryptocurrency markets, but it's not. This is stuff they teach you on day one of currency trading school. In the middle of January, people are going to get their bills from Christmas, and they're going to panic, and they're going to go to the market and extract some money, and therefore the big shots, the whales, what they do to hedge themselves against that kind of panic is they pull some of their money out of the market before those people get there, and they put it on February gold, right? And then once all the punters are out, and all the people who make bad decisions with their money are out, then they take their money out of gold and they put it back in the stock market, and they ride the wave of all the other money coming back in. That's how it goes. It doesn't always work, and it doesn't always play out that way. A lot of it has to do with who's the president of the United States. Democrats tend to like to tax people a little higher, and when people are taxed higher, they spend less money on things that they want. Republicans tend to lower taxes and lower regulations, and that instills consumer confidence. And if you don't believe me, go look at the consumer confidence numbers for December, because people did more holiday shopping this year than they have in something like over a decade. People spent a lot of money this Christmas. And you think like, well, it's just a holiday. No. There are almost 1/3 of the population of this planet says that they are a follower of Jesus Christ. That's 1/3 of this planet saying, I celebrate Christmas in this way. I get a tree, I put lights on it, I put gifts underneath it. That's 1/3 of the planet, and guess what that 1/3 represents? All of the first worlds. Like all of the richest people on the planet, they all celebrate this holiday. So it's no small thing to say like these people, they spent a lot of money this Christmas. They're feeling confident for whatever reason. Maybe they like Donald Trump, maybe they just like the tax break. Who knows what their reasoning is, but the fact is that it played out. They spent that money, and they got their bills on Monday. Okay? So you better believe it's going to have an effect on a cryptocurrency market where there's no rules. They can't come and tell you, well, I'm sorry, but you just don't have enough of a minimum investment, or you don't have enough experience in financial markets and using financial products. We cannot let you come trade this market. There's none of that. Anybody can get in. And so when these people get their bills, they got to pay those bills. So is it too far of a stretch to say that I'm going to go to the cryptocurrency market where I put I put $500 in it, and you know what, I'm up to $700. I think I'm just going to cash out and go pay my Visa bill. Not a hard stretch. So yeah, I hope that you take that information of the seasonal trade and take it back to your buddies who were busting your balls the other day, and you can tell them, like Sean and Gus used to say from Psych, suck it and suck it and suck it and suck it in your face. Anyways, that's it. That's it for the show today. You have a decision to make, friends. You have one of 3 decisions to make. Cash out, walk away. Decision number 2, hold on for dear life, wait for it to rise back up. Or number 3, favor fortune. Sorry, wow, I butchered that. No, I didn't. Favor fortune's. Wow, number 2. Fortune favors the bold. Fortune favors the bold. Do you think that $300 billion is coming back up? If you believe that, if that's what you think, and this is the decision that you're going to make, then once you've made your decision, execute. And take advantage of the fear in the market right now as those $300 billion come rolling back into this market, regardless of how long it takes. That's it. Thanks again, guys. Talk to you next time.